A day for the history books. The stock market on a rocket ride, blasting through a ceiling and closing at an all-time high.
The latest S&P Case-Shiller report showing home prices rose 0.8% in February.
You paid 14% in federal taxes. That's the capital gains rate.
The recession began just 2 months later. Now Wall Street is booming again.
Capital gains and losses can affect your taxes, especially when stock markets fluctuate. Here's how it works. An asset is anything you can use for personal purpose, pleasure, or investment. That includes your house, your car, stocks, even your stamp collection. If you sell an asset for more than you bought it for, that's a capital gain, and the IRS may tax you on the money you've made. But there are ways to avoid paying the capital gains tax. Number 1, don't sell. Say you bought a stock for 20 gold coins, and 2 years later, it's worth 30. If you sold it, you'd have a 10-coin capital gain, which is generally taxable at about 20%. If you don't want to pay that, just hold on to your stock. What's more, if you sell your stock within a year of buying it, that's considered short-term, and the capital gains tax is much higher. Number 2, offset your gains with losses. Say the year you bought that stock for 20 coins, you also bought another stock for 15 coins. We know one stock increased in value over time, but the other one decreased. You'll owe capital gains tax over here, but you can claim a tax deduction for your capital loss over here and offset some of those taxable gains. In real life, you can claim up to $3,000 a year in losses. Number 3, reinvest. If you sell stocks in a 401k or IRA retirement account for a capital gain, you don't have to pay capital gains tax if you reinvest your gain in other securities, like more stocks or bonds. It's also worth noting that if you're in the bottom 2 tax income brackets, you don't have to pay capital gains tax. For single or married people filing separately, that means earning less than about $37,000 a year. For married people filing jointly, that means earning less than about $74,000 a year. These are some of the basic capital gains tax rules, but it can get really complicated, so if you have questions, see a tax professional.